Hey, what's going on, guys? We are back. It's your boy MC Fire coming at you again with another Monday update. We're looking at the queue starting out. We're going to go over some plays. Didn't have a Sunday video. We probably have a Sunday video coming up. Uh, we're currently in the process of moving. Not sure if you guys are tracking that. There's a lot we had to get done yesterday while we have the time. So just to kind of touch and go on some of the stuff, there was definitely quite a few hits. Um, or a couple of hits, and we'll kind of go through those really briefly. But the kind of the main news is the Qs, the SPY, really in a significant uptrend, maintaining the trend line. Remember, this is just a invisible line in space, so it doesn't hold any weight or credence to what the actual decisions of the market are going to be. But we like to make things visually simple. So bottom left, top right, kind of following this basic trend here. Um, there was an opportunity to go ahead and take a position, so we did. And in a sense, kind of pushed above that to fill that gap. The real question is it going to really test highs? Filling the gap was more of a higher probability that it could or would do that. Um, but its ability to kind of fill that gap as shown here, fill that gap and keep pushing as we approach the open here, might give it credence to go in and test to highs. At that point, we'll make a decision, essentially buying from where we bought in the Qs and roll the position at highs when it gets there, essentially, to basically get out of the danger area and take some profits off the table for a nice clean double if it gets there. I do kind of anticipate it getting there because in the past, when you see this play kind of come into fruition, there is a nice follow through of a few days. This one kind of didn't, but it threw you not too long after the same look and a nice follow through. And it kind of happens a lot more than you think. I like the triggers on the Qs and the spine. They're going to be harder to manipulate and buck against, especially if that's the trend. These guys are getting off sides off a knife dip. That's kind of what the market's looking for. You see a nice follow through candle there with the setup candle there as well. So it shows that the market really liked that play and will follow through. Here, as it broke above this one, a little not really in the edge that we want, but it still had a nice follow through. And this one right here is kind of exactly what you want to see. Harambe pattern with a hammer candle, retesting kind of the rotational zone there. As it broke above, you could anticipate it breaking this zone and then definitely rallying into the next one for a nice reward. It's a similar theme as we're just going back as we're back testing. So really nice stuff. It happens kind of over and over and over again. But we do have a Briva here, kind of transitioning into a downtrend. So these guys, if you're looking at a Briva, here we go, boom, putting that there, and then at this point, if it breaks below on this setup candle, we'll potentially take a position to the downside. Again, we are moving, so not necessarily looking to get into a whole lot of positions, but if there's something extremely juicy or discontinues, throws a few more candles and then trades against them, it might be a good look to set up to the downside. We also have American Express, huge movement to the upside, hitting 3 ATR. If you're in this position, I would look to roll, make a decision, take some off the table. If you're trading for short-term volatility, if you're trading for like a longer-term position, longer-term positions we typically look at anywhere from 3 months to a year, right? Good job, hats off to you. Where it came from though, I would definitely say you did pretty good if you like took the trend change. Long-term positions typically happen after a trend change. So over here, we don't just take long-term positions just because we think our gut feelings. A lot of interesting things coming out of our guts, but not typically good ideas. So if the trend changes, would you be okay with, let's say the trend changed here at 162.89? Would you be okay with it running to 300? It's pretty good, not too bad at 3 ATR. So looking to buy the dips, it kind of works the same way. If you want to look to buy the dips, right here would be a good opportunity to buy the dip. Right here would be a great opportunity to buy the dip and a decent opportunity to buy the dip right here if you had a buy bias anyway. Same thing here. Really good rip, by the way. So system is a system for a reason. shout out to John the Deer. We've been tracking this one kind of through a very nice candle there. Setup candle, break above, and then very juicy rip. If you're in the Deer, it is at 3 ATR. So I would look at maybe possibly some resistance. I think it traded above that though, so there is a little follow through there. In after hours, probably in the morning, it'll probably open above high, but looking really good for the John Deere. But again, if you got in down here, shout out to you at 392 and 30 cents. And if it gets up to here, that is a very nice rip. Earnings definitely gave you a little juice there for sure. We have HD, kind of same thing. We wanted to get in, never really got filled. That's why the arrow was there. Would have stopped out at the low. Would have been at 420. You can't win them all, but it was there. Also, you got another setup candle here as well. So follow through up to highs is likely, but not guaranteed. It is already actually, I think it is already up there. The bid and the ask is already kind of up there. Yep. So it would have definitely hit our take profit at the open, and we would have been able to roll that. So shout out to that, right? Seeing that back here and then seeing the blowout candle go all the way through what would be our highs to take profits or decision making point there. You also have this bad boy here. So we do have a kind of a buy bias, by indicated by the greens here. But the issue is though, we're just gonna wait till we see a trend change to add any more to it. Like we could have added here at this break. It's definitely at the 3 ATR territory. If for a buy bias, that would be the place you want to buy it. But we went on and took some early positions just to kind of put it on our shelf, watch it, and move on from there. It's kind of something with Peter Lynch. If you like something, you think it might be something that'll play out in the future for a long-term buy, put it on your shelf and just kind of watch it, get a few shares, and see what happens. So we didn't get our full position or really lay into it, but I do like the concept, and I do think the environment is ripe for seeing something like this bounce back into the fold. So that's why it's on the list. Procter and Gamble, what's up, Procter and Gamble? Absolutely crazy rip here. You do have kind of one of those transitional rips, so it kind of went red here. So the trend did go red and then it went green. So these are kind of hard to catch on the button, and I'll say that fully, because the indicators are lagging. The trend change is going to lag, so you're looking for the trend to change and then take that first dip. You don't really get an opportunity to nab Procter and Gamble, but I mean, there's going to be plenty of opportunities out there with trend change continuations and potential trend change continuations and potential bias buys that look pretty healthy, right? You can see, as you see here, there is no real trigger to take the sell or the buy. No break below there, and then this gives you no real setup candle for the buy. So Procter and Gamble, nice rip, but it ripped without us. Essentially, this is almost your blowout candle here at the top. Goes all the way up, boom, and hits your position where you would make a decision. So it's just kind of a heads up that things are moving at highs. Wouldn't necessarily prioritize getting into play right now. If you're not in, there's, again, we live in a world of abundance, and these plays are laid out so that you could find the abundance or have the abundance find you. We do have Target, good old Target. Definitely not it was here, but there was like clearly no opportunity to get in unless you were trading after hours, which we are not. But if you had a buy bias or you just like the company, you're looking at 3 ATR. Some sellers are kind of exposed here. You're seeing buyers kind of step in. So it potentially could be, if you have a buy bias, right? Yeah, I would say instead of this one, maybe this one, take that position there. But all this value that, these price points never really got hit, I believe that it could be a good position for, instead of like buying vertical, maybe you might sell a vertical. That could be one play, get the premium there, or even run a butterfly, a pretty out of the money butterfly, like all the way up here. And if it hits, shout out to you. But I mean, it dropped essentially in a day that far, so I wouldn't be surprised if it really got steamrolling and you got a short squeeze set up here, that you could see a nice juicy rip. Walmart, clearly, a little bit of the same here, right? It's very, very strong uptrend, a very, 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 very pronounced blowout candle in a very, very powerful, powerful week. Um, Kind of been in a really clean uptrend since the beginning of the year, kind of like the halfway point of the month of January, and yeah, that's pretty much all she wrote. It kind of makes sense when you think about the way the economy is right now and what people have been saying. That there's going to be more pivot into more budget friendly and value companies. So like where Target might be a little bit more pronounced as it regards to quality over quantity, and you're going to pay a premium for that. Walmart is the almost exact opposite. You go in there and you find what you're looking for at a decent price, and right now I think that's what people are looking. So there's a little rotation there, and you can see that very pronounced. While one is got a massive drop, the other one is hitting all time highs. So set out to Walmart. But if you look back through here, is there plenty opportunities to take Walmart on the buy? Well, absolutely. Walmart here, we're just going to zoom in here with the Wally World there. Definitely a break here for sure. Definitely a follow through with the volume there. Probably almost take it early, and huge follow through there. Here you wouldn't have had an opportunity to get in because it did have a bounce off for earnings, but even here, there's significant follow through there. You might take it here, get stopped out, but take it here, and then the follow through is immense against more earnings. So you just kind of you're starting to see a pattern here. I really like what we've built over here. I'm going to continue to use it as the simplest and most effective system that I see in the market for catching short-term swing trends, and it even kind of works very similar on the daily. There is a little bit more to it on the daily internally, but yeah, using a high essentially it's just incorporating, you have a higher time frame analysis to a lower time frame analysis. Then you have a very good setup with something that we've built over here. And it's visual, it makes sense, it has very clear and defined rules, it has abilities for you to protect yourself with risk management as well as profit management. And that's really important. I think a lot of people harp a lot on risk management, but without giving people very clear and defined rules on profit management that we definitely like to do over here. Where do I pay myself? Where's a good opportunity using all the fundamentals or even fundamentals and technicals that we have to pay yourself? What's like a statistically good range to pay yourself? So that's one thing that we like to talk about over here as well. Meta, just kind of see what's going on with some of the more heavier. This is kind of giving you an early indication of things might be getting a little heavy. We might go under the hood in some of these indicators, or scans on Sunday. That's kind of what the Sunday show is about. If you have a question about some of these on the previous show, ask me on the Sunday show. That's kind of where we get into it. Most of like the weekly shows are just me kind of going over the plays and how the open kind of works, and what's going on with the open. We got about 5 minutes on the open here, but yeah, Meta pulling back relative from relative highs of 600 into the what I call a strike zone. Typically, you want to buy close to the moving average or slightly below it and sell away from the moving average, or at like 3 ATRs, positive or negative, right? We don't want to be buying up in the 3 ATR area. There is some occasions like right here, I'm pretty sure you could find an excuse, but ideally I'd want to catch it down here on a pullback, and then look to make decisions here like rolls, give you options to stay in plays, but limit your risk and prepare to get more profit. For Meta, no setup, no trigger. It's just kind of being cognizant of what's going on with the big boys. See, they're both kind of trending in this mid-range territory. Microsoft and Meta, really big guys. System working out pretty good, but again, Meta is in negative territory. So no matter how you feel or what you think, we're going to go by what the data is showing us, and the data is showing us that there's potentially could be a little bit more follow through, potentially to the low here at 406. We're going to be shorting the rip there on Meta. We didn't necessarily take the short on Meta, but there is significant follow through. down to well, right now it's not down there, but it was at 411.02. Now it's kind of bouncing up to 417. So a little bit of a push there. We'll look at the daily chart to see how that's looking, but it's about up another dollar. And so we'll see how the open shakes out for Mr. Meta and Mr. Microsoft. So you also have Broadcom kind of pulling in the same boat there. Um, there is a potential setup for Broadcom AVGO. We'll be watching that. We kind of want to get into Broadcom. We like that. We took like a position here and then went on and I think rolled it and then closed it here. So and I think we bought 7 shares as well. So we bought some shares of AVGO, not too bad. But then you have this setup here for a little bit of the same action. If you can get above that, outstanding. We're kind of hoping for that, but we'll wait for the market to tell us what it wants to do. Same case in point here. As you can see, like Nakor, although we love our Nakor because Nakor has a special place in my heart for one of the first positions where mentorship and edge kind of came to play in a very, very amazing manner. I was, working my good old job. As I went to go get my morning coffee, I opened up my account or I got an alert that says, you know, you're up like 10%. And I was like, wow, I've never, normally my account will say you're up 5%, you're up, 3% on the day, 5% on the day, whatever. Today it said you're up 10% on the day, like the whole account. And I was like, what the heck? And I think that's the limited part. It stopped. And then when I go look in the core, it's just an absolute monster of a rip in the core here. Let's go back and see where the arrows are here. You think I know it, but yeah, right here. So it's the first time I actually used what my mentor said to really great effect. It was the first play that happened. The second play I think was Tesla, that I actually implemented all pretty much most of the teachings of what my former mentor said to me. So it was above the 8 period moving average and broke the previous week's high. Absolutely took a monster of a rip there. Boom, cannons and confetti. And then that was rip one. I think I even opened one, and then it ripped one. I closed one, rolled one. It went up. I rolled it again, and then closed it. Right. So that rip was like super super crazy to me. Right. But clearly today, right now, we're in a defined downtrend. Downtrend. The market's going to open here in about 44 seconds. But we defined downtrend at the essentially the 29th of was it March, April, excuse me, April, and then as it kind of trades to a downtrend, nice rip here, but a very clear sign that if it trades below there, you definitely take it. And it's plenty of follow through almost to the low. Wouldn't necessarily be a dig for a tick here. Once you see it kind of drifting back up, you could definitely roll it. There was no blowout candle indication, but once it gets down into this range, I mean, you're looking to really the first sign of danger is the gap. This between here and here, or here and here. So once it closes that gap, you're done. Like it's pretty much a straight shot there. So we're getting the Nike and the Qs. Let's go to take a look. We saw the Qs, so we'll just kind of tap in there, see where it kind of opens. Yep, for the Qs, and then we're gonna go look at the Nike. Okay. Shout out to the Nike. So we did. I think we took a maybe to the downside. Oh yeah. So we're definitely gonna close that out. So yeah, not everything is a winner. This one went down about 69%, and we're gonna immediately take our licks and call it a day. No ifs, ands, no buts. Just call it and close it. Boom. There it is. So you guys see a loser there, which like I said, are gonna be winners. But when they are winners, it's a good day. Not CCI. Boom. Okay. So we'll go ahead and for the bookkeeping sake, just kind of show, hey, this is where you also I gotta think, you had Christmas coming up, so that this makes sense. The world wants to spend a whole lot of money, some of which they don't have on stuff like this. So there it is. So there's Nike. I did take a stop out, but again, following your plan, there's nothing wrong with ever following your plan. And you taking a stop out here means, hey, you live to fight another day. You can't win them all. Proper risk management is important too. We want to remain like two bar professionals. So catching these guys on the slip, but they kind of caught us on the bounce. So it is what it is. I think we saw TXN come through here as well. There is a position that we can get for this guy. Let's see if the options are cheap. If they're cheap, we'll potentially take a position. And it's actually pulling back pretty nicely. So sweet. So this is actually the time we can make a decision if we're gonna do it. It was roughly, oh, that's because it's on 4 days. Let's look at 25 days. That sounds more right. Okay, so coming through here, we're gonna do just a basic, close to a 50-20. It's not too bad. Yeah, so we'll take it. It's been an uptrend. We want to, well, let's see. Let's see. We have it selected down here. Is it in a really clear uptrend? Let's see. Yeah, it's kind of treading water at this stage. But that red is tight. And I like that. I like the fact that red is like really tight. Um, does it follow through on tight red? Just look back here. Not necessarily on this one. It's been trading water, so we'll bypass on this one. Again, we took the position here, enrolled it twice for a very, very nice profit. What we could do is, as it's pulling back, we can access highs and then see what happens. Target also marked above and broke its previous level that we had marked there. We'll keep that down there for right now, just to keep it in our minds. But not looking at, I'm probably not going to take that position right now. Let's go look back and looking at Target just to see, because we just commented on it, what we're talking about. So yeah, Target definitely breaking above there. If you had a buy bias on Target there, this thing could really follow through to kind of at least fill the gap halfway, so somewhat halfway. And so this really could rip. I mean, it really could, as you can see already. Aftermarket buying stepped in, but there's already a little bit of a nice push. So I'd want to see at least a pullback to VWAP, but it might not even do it, right? Because there's so much probably short interest. That might be some tool that we could probably incorporate in our deck, is knowing what the short interest is on certain things. And if it's extremely relatively high, then you could potentially see a very nice rip against the short interest with a lot of pocketed dough. Right, so boom, that's not too bad. Go over and monitor Nike close. That's what we want to see. Shout out to us, we. And then we've got, so Microsoft taking a bounce is good, and Nakor kind of taking a bounce is pretty good. So see if anything else is in play in the morning. A lot. Nice, some follow through there. Walmart, little follow through back to highs. Abreva, same thing. Procter and Gamble, nice push. That's insane. Breaking highs. So if you're in that Procter and Gamble play, yeah, make sure you make a decision there. There you go. Also at the 3 ATR territory, definitely blowout candle on the previous day. Definitely look to roll, take some profits. Target, we just went over that. Make sure that your risk, like, I'm not telling you what you should what you to do, but I would say for my risk, if it breaks the low here, I would let it go for sure. And danger area is like the halfway point between here and here, kind of filling the gap. So danger zone, taking the buy, look to roll in the fair value of this gap, or even coming into this gap, depending on your risk appetite. Roll, take some off the table, whatever, and then your real first sign of danger Next sign of danger is going to be here at this resistance level, and then there. Those are the key levels that I would be looking at moving forward. DE, really nice follow through, but again, same deal with the other ones. Look to make a decision here. It doesn't. I don't think it's going to stay up in the 3 ATR territory historically. Like it's not done that up here and up here. So, but hey, you never know. Like times change. DE might be the place to be. So you just gotta watch that puppy. But having a good edge and really good mentors, really shout out to the mentors for um them giving you a good foundation and telling you like what's your plan and having a good plan, right? Having a decent plan. So there's a push breaking highs again, right? So there it is. That's not bad, man. I don't think that um we're looking at risk to reward, right? 195. First sign of danger is to in an uptrend. Yeah, we'll take it. It is what it is. If it gets to about up here, we won't chase it. We'll just let it go. It's on its push. It did come back to come pick us up, but if it runs, it just runs. So we might have just missed our opportunity, indecisive, but it is what it is. It did come back and pick us up, so that's on me if we missed a follow through there. Red candle, seeing it go that much back up to VWAP, that probably should have been enough there. But if there's going to be a break of high retest follow through, we'll catch it on when it slips. If not, we won't chase. We'll let it go. But that's what I got for you guys. So I'll let you know later if we get into that position, if it works out, if it doesn't. Not looking to chase it there. Probably should have got it on the bounce down, seeing that massive volume, and then it kind of went halfway up that very extremely large red bar. But it probably won't do that. It'll probably catch these guys and then really rip. I think that's what's probably going to happen. So, but yeah, that's all I got for you guys today. Thank you guys for joining MC Fire on this Monday market trading day. You guys have a wonderful day. I'll see you guys later. Bye bye.